So hi everyone, welcome to Grape Wealth Management. I'm excited to go over this past week. So this past week has been pretty good. Overall, the Dow Jones was up about 2%, whereas the S&P 500 was up 2.6%, and the NASDAQ, which is the technology sector, was up 3.3%. So finally, a pretty good week. Now, I wouldn't say that we're completely out of the woods yet. At the end of the day, defensive stocks and large cap stocks were the ones that primarily outperformed this past week. So they outperformed the rest of the market. Now, large cap stocks as well as defensive stocks, these are companies like Johnson & Johnson, Coca-Cola, Procter & Gamble. So really big companies that are very strong that pay good, healthy dividends. And what this means is that the growth companies that are still growing, that are reinvesting their funds, these companies are the ones that didn't do as good, which ultimately means that there's still economic worries. So we aren't out of the woods yet. So rising interest rates. Rising interest rates directly affect growth companies. So the reason why these large cap and defensive companies have outperformed the rest of the market, specifically growth companies, is because when the market becomes more volatile, usually investors want stability. And the way that they get stability is investing in companies that are large, strong, that pay good, healthy dividends, and that are stable relative to the rest of the market. So we will be watching this week, and specifically on Wednesday when the Feds meet, to discuss how much they are going to be increasing interest rates. Now this could be anywhere between 0.5% all the way up to a full 1%. And the reason why I say a full 1% potentially is because if you recall, inflation numbers came back higher than expected. Expectation was 8.8%, but it did come in at 9.1%. So inflation continues to move faster than it anticipated. So the only way that we are able to combat that is the Feds to do these large rate hikes to get it under control. So a few things to watch during this week. So Tuesday, new home sales. New home sales expectations is about 696,000 homes that were sold. The expectation moving forward is 664,000. So that is a 32,000 home difference. Also on Tuesday, we have consumer confidence index. This is going to let us know how confident consumers are in the economy. Last report was 98.7% confidence. Expected is 97.8. So again, going down a little bit. So Wednesday, there are two important pieces to watch: pending home sales and initial job claims. Pending home sales, last report was 0.07%. Expectations is to come in a little bit lower at negative 0.5%. So that going down a little bit. So initial jobless claims, last report came in at 251,000. Expectations is supposed to come in at 248,000. So down about 3,000. All right, guys. Well, I look forward to your next weekly report. If you have any questions, if you need anything in the meantime, certainly just let me know. You could either comment below or feel free to give me a call or send me an email. I look forward to speaking with you guys soon.